Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So here we are. We find ourselves nicely above this upside resistance area, this $46,000 to $47,000 level. This is the important one that I was looking for us to get through all this price action, get through these lower wicks we've got down here. And yeah, what we need to see now, what we definitely need to see now over the next few days is a nice acceleration somewhere into this area that we've got here. We'll actually extend some of these lines over now that they are basically relevant once again. Now price action is up here, but yes, some of these levels we've got to see some moves up to some of these levels. Obviously we'll extend this along as well, or this will can potentially look like a bit of a swing failure if we don't see any follow through with this price action. So if we do come back down below about 46,000, then yeah, we could very easily see a move back down to like the 41,000s, and then there is nothing realistic to say we couldn't break that level and then come down and test, well, either 39 or 30, 35, 36 again. So yeah, that is what is on the cards. We do need to get acceleration. Like I said, if we do come back down, we can 44,000 is a great area for us to bounce. But I do suspect we may see a deeper move, because this has just been pretty much straight up from about 37,500. So there was a lot of obviously people long this on leverage that haven't really been put to test yet. So we could see a bit of a cascade of selling, obviously, if we do pull back. So I think if we are to lose $46,000 on, like, say, a 4-hour closing basis, I think there is quite a high likelihood we make our way back basically into the $42,000 level. But that could be the perfect buying opportunity for then a move back up onwards and upwards, or that could be the level where we turn back down. So we'll have to see what happens. There are a few potential warning signs over in Finance 1.0. The S&P is looking absolutely brilliant, but has now got up to an important resistance area. So a pullback from here, even back down 100 points down towards this horizontal area, this old support here, would not go amiss at all. You can kind of see it kind of happened here, and then ultimately we failed. But yeah, we could see some bouncing around between this, say, $45 and $4,600 level before ultimately breaking up. Obviously, if we just break straight through here and continue up, then happy days. But you just kind of have to ask yourself how realistic that probability would be, and certainly it is a realistic probability. But so is testing some downside. Another thing we potentially need to look at is this dollar index, because whilst obviously it's coming down, we are potentially back checking this downward sloping trend line, and then if we get a paycheck, that will certainly be at the same time we probably getting a move down in stock markets as well. So there are a few signs that we are at an inflection point where it would make sense for us to have a pullback. So we'll have to see what happens. If we do basically pull back below this trend line, get down to, like, I don't know, like down to about 98 spot sevens, or even sixes, then yeah, I think we basically, it's a swing failure above this trend line. But at the moment, especially where with the S&P is poised, this could look like this could be set for a bounce, and stocks could be set for a pullback. We shall have to see. What is relatively good though is our good old ruble has managed to close this gap and make it through this area, which is potentially bullish. And the reason why that's good, I mean, if obviously the ruble's good, it kind of shows that the markets are thinking that things are potentially calming down, or we don't really have to worry as much about Russian defaults collapsing Finance 1.0. So this is good. This is good to see. Just purely on the basis, for markets. So yeah, we've got that. That is obviously good. Oil pulling back a bit again. This is probably similar to what is going on with the ruble. If things are potentially easing or the situation's looking better, that is obviously a negative for oil. I mean, we maybe got a bit aggressive with where we drew these trend lines, but you can maybe see that just sideways within this pattern, within here, basically sideways was what I was calling a tightening formation. That's literally exactly what we've got, but we just didn't quite get to the extremes of the triangle. But we still may do anyway. We shall have to see what happens here. But yeah, we do all know structurally oil is bullish, but the whole market, everybody is like is an oil fanboy at the moment. So how many more buyers have we got to get into this market before we then potentially do test some downside? And yeah, I mean downside to about 85, 80. Well, basically this horizontal here, or maybe even 78 could be what is on the cards in a washout, and then yeah, we'll probably find ourselves nicely back above 85, between this 85 to $95 level, where we then stabilize out and then carry on with the grind upwards, providing we don't go into a recession, which is looking unlikely for this year. A recession is looking unlikely. A stagflationary environment, with lower and slowing growth, and inflation still high, is likely, but an actual recession with basically negative GDP growth is not looking particularly likely. Nascoin as well, basically getting up to its level, just peaking above it here on a 4-hour 9. Got this downward sloping trend line as well. Still got a lot of work to do. You can see this chart's got a lot of work to do. This is obviously the what were the darlings of our previous bull run, all those FANG stocks. This is obviously the tech stocks. So yeah, like I said, a lot of work to do. These are obviously going to struggle in a high interest rate environment. So we'll have to see what happens there. Anything else you want to look at in here? Yeah, of course, we want to look at some Ethereum Satoshi pairing, having a nice little move up here, indicating potential risk on in the crypto market. Maybe we are getting I mean, there are some altcoins that are making moves, but obviously not all of them, not wholesale. But yeah, this is looking like we wanted to try and break out of this little formation, and our target is up to here. The ETH USD pairing also attempting to break through its resistance area here. This is the one that I've been talking about. Get back above here, then yeah, realistically, I personally think is a high likelihood of new all-time highs, and we'll be targeting anywhere into the mid $5,000 Ethereum. That is what I personally I'm thinking, stroke hoping for. The Bitcoin dominance as well, looking like it's gonna attempt to break through this down sloping trend line. But just don't forget, the dollar index could potentially have a bounce. Stock market could potentially have a pullback. We could actually see a bit of obviously counter to this bull trend action. So maybe we just bounce off here one more time before coming back down. But yeah, nonetheless, we're at it now, so we could just break down. We could just catapult straight onwards and upwards from here. What else? Not much else to look at on here. Not too much else. So let's have a look at those stochastics. We know that they're obviously going to be looking good in the longer term. It's just like, are those medium terms turning back around again, turning around a bit, or not at the moment? But yeah, 4 hours still up there. 4 hours still up there. Slightly irrelevant, the 4 hour in the context of the move that we're having. Yeah, 10 hour is pointing up, pretty elevated though. 12 hour I assume will be pointing up as well, and pretty elevated. If normally we don't get a slow 12 hour, but hey, yeah, still pointing up and pretty elevated. Daily, well, still pointing up but looking to turn back down. So yeah, maybe this daily 12 hour and 10 hour do give us some relative sideways. However, we then have the 2-day, 3-day, 5-day, weekly, all looking particularly good. Bi-weekly looking to turn back up, and obviously that's our monthly for sake of completion. But yeah, maybe we get, like I said, we've got to get a bit of acceleration here, because if we do sort of consolidate where we are, we could find ourselves back below 46 and testing lower. We kind of need to get a bit of a move up towards, up towards the $50,000 level, up towards this 49, 50,000, and then we can pull back. Then we've got room to maneuver back down into a $46,000 pullback, and then consolidate and bounce onwards and upwards from there if we are to be bullish. So that is what we are gonna wanting to be seeing. But yeah, if we do have a look at some of the larger time frame charts today here, you can see a clear pattern. We've got a high, a low, a higher high, a higher low, and basically looking for a higher high. Would obviously take us to new all-time highs. I mean, that is what we should expect in a chart. Maybe then we do just get above here to about 70,000, maybe even 80,000. Then maybe we do see a pretty aggressive pullback, maybe back down towards 50,000, and then we'll see what happens. We have got this window of opportunity of maybe 2, possibly 3 months towards the end of Q2, where markets could be quite accommodating. So yeah, we'll have to see. We shall have to see what happens. So remember, this is not a financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.